Have you heard of Asian tigers, the economies of four great countries, namely Hong Kong, Singapore, South Korea, and Taiwan? These nations have consistently maintained high levels of economic growth since the 1960s, driven by exports and rapid industrialization, transforming themselves from low-income to high-income nations. Their economic growth serves as a model for many developing nations. Hong Kong, one of these tigers, has a vibrant real estate market that plays a significant role in its economy. The city is known for its high property prices and has one of the least affordable housing markets in the world. The investment market in Hong Kong is seeing robust, pent-up demand and high liquidity. The overall investment volume in Hong Kong's real estate market increased by over 15% in 2022, estimated Hong Kong $84 billion equivalent to 10.71 billion US dollars. This highlights the dynamic nature of Hong Kong's real estate market and its significant contribution to the city's economy. But how did they do it? Stay tuned as we unravel the secret to the success of the Asian tigers. The rise of Hong Kong's real estate market is a story of resilience, innovation, and ambition. From a humble British colony to a global financial hub, Hong Kong has witnessed remarkable transformations in its economy, society, and urban landscape. What is the historical context of Hong Kong's real estate market? And how does it compare with the real estate markets in other Asian tigers? Well, Hong Kong's real estate market began to take shape in the 1950s when the influx of refugees from mainland China spurred the demand for housing and industrial space. The government adopted a laissez-faire approach to land development, allowing private developers to acquire land through auctions and leaseholds. The textile industry was the main driver of industrialization, followed by electronics, garments, and plastics in the 1960s. The 1970s marked a turning point for Hong Kong's real estate market as the government shifted its focus from industrial to commercial development. The establishment of the Mass Transit Railway (MTR) system in 1979 facilitated the urbanization of new towns and satellite cities, creating new residential and commercial development opportunities. The 1980s and 1990s witnessed the rapid expansion of Hong Kong's real estate market. The signing of the Sino-British Joint Declaration in 1984, which stipulated the return of Hong Kong to China in 1997, triggered a wave of investment in the property sector. The 2000s and 2010s saw Hong Kong's real estate market reach new heights and face new challenges. The market surpassed its previous peak in 2010 and continued to soar until 2019, driven by high liquidity, tight supply, and robust demand. Hong Kong became one of the most expensive cities in the world for housing, with an average price of Hong Kong $242,857, equivalent to $31,080 US dollars per square meter for apartments larger than 160 square meters in May 2023. Compared to other Asian tigers, Singapore, South Korea, and Taiwan, Hong Kong's real estate market has shown remarkable resilience and growth, helping the economy over the decades. However, it has also been more volatile to external shocks. Hong Kong's real estate market reflects its economic success and social challenges. As John D. Rockefeller once said, "The major fortunes in America have been made in land." This underscores the significance of real estate as a key driver of wealth creation and economic growth in many nations. What are your views on real estate for economic development? We cannot talk about Hong Kong's real estate market without the key players in Hong Kong's real estate, their history, key projects, and impact on the market. Wait, at Wealth Herald, we bridge the gap between you and financial mastery. Dive into the world of the rich, unlock the enigma of money, and start your journey to side income success. Together, we make wealth achievable. So, don't miss out on this opportunity. Subscribe to the channel and put on notifications to get notified of new uploads. So, Hong Kong's real estate market is dominated by a few powerful players who have shaped the city's skyline and economy. Who are these key players in Hong Kong's real estate? The government or private? Well, the undisputed leader of Hong Kong's real estate is Sun Hung Kai Properties, the world's largest property developer by market capitalization. Founded in 1963 by Kiwak Tak-sing and Fung King Hei, Sun Hung Kai Properties has developed some of the most iconic landmarks in Hong Kong, such as the International Commerce Center, the International Finance Center, and the Victoria Harbour Residence. Sun Hung Kai Properties is known for its high-quality standards, innovative design, and diversified portfolio covering residential, commercial, retail, hotel, and industrial properties. Another prominent player in Hong Kong's real estate is EK Asset Holdings, the second largest property developer by market capitalization in Hong Kong. Established in 2015 by Li Ka-shing, CK Asset Holdings is the successor of Chun Kong Holdings, which was founded in 1950 and merged with Hutchison Whampoa in 2015. CK Asset Holdings has developed some of the most prestigious properties in Hong Kong, such as the Center, the Harbourfront Landmark, and the Cullinan. CK Asset Holdings is also active in mainland China and overseas markets such as Singapore, Australia, and the UK. A third influential player in Hong Kong's real estate is China Resources Land, the largest state-owned property developer in Hong Kong. Founded in 1994 by China Resources Group, China Resources Land has developed some of the most successful mixed-use projects in Hong Kong, such as China Resources Building, MixC World, and China Resources Tower. China Resources Land is also a leader in urban renewal and green building, focusing on sustainability and social responsibility. Hong Kong's real estate strategy is like a master chef's secret recipe. They mixed a dash of limited land space, a sprinkle of high demand, and a generous helping of vertical construction. It's like they're saying sky's the limit. Perfect, we'll build up to there. This reminds me of a comment from one of our viewers. As a Hong Konger, I really appreciate this deep dive and explanation of the importance of HK. I am proud of my city. Now let's look at the strategies, the tactics, and the detailed analysis of successful real estate investment strategies in Hong Kong. How did they do it? Hong Kong's real estate market is one of the most competitive and dynamic in the world, offering both opportunities and challenges for investors. But what are some successful real estate investment strategies in Hong Kong? Well, one of the key strategies for investing in Hong Kong's real estate is to identify the market trends and cycles and to time the entry and exit points accordingly. Various factors such as interest rates, supply and demand, government policies, social unrest, and external shocks influence Hong Kong's property prices. Investors need to monitor these factors and anticipate their impact on the market sentiment and direction. For instance, some investors took advantage of the market downturn caused by the COVID-19 pandemic and bought properties at discounted prices in 2020, expecting a rebound in 2021. Another critical strategy for investing in Hong Kong's real estate is diversifying the portfolio and seeking value-added opportunities. Hong Kong's property market is highly segmented by region, sector, and quality. Investors can diversify their portfolios by investing in different types of properties, such as residential, commercial, retail, industrial, or mixed use. They can also seek value-added opportunities by investing in properties that have the potential for renovation, redevelopment, or repositioning. For example, Linkrate, Asia's largest real estate investment trust, has transformed many of its retail properties into modern lifestyle destinations through asset enhancement initiatives. A third essential strategy for investing in Hong Kong's real estate is to manage the risks and leverage the resources. Hong Kong's property market is subject to high volatility and uncertainty, as well as strict regulations and taxes. Investors need to manage the risks by conducting due diligence, setting realistic expectations, and hedging against currency fluctuations. They also need to leverage the resources by securing adequate financing, partnering with reputable developers or agents, and tapping into professional networks. For instance, CK Asset Holdings secured a record-breaking deal to sell its office tower, the Center, for Hong Kong $40.2 billion, equivalent to $5.15 billion US dollars in 2017, to a consortium of investors. Risk management is essential in every business. As Gary Cohn, an American business leader, once said, if you don't invest in risk management, it doesn't matter what business you're in. It's a risky business. These are some of the strategies and tactics that have proven effective for investing in Hong Kong's real estate market. However, investors should be aware of the potential risks and challenges in Hong Kong's real estate market. What are they? Let's find out. Hong Kong's real estate market is one of the most expensive and competitive in the world, but also one of the most challenging and risky. What are the potential risks and challenges in Hong Kong's real estate market? Have successful investors addressed these challenges? Life and business are like a game of chess. You plan your moves, but sometimes you get checkmated by a pawn. You're the king, but there's always a risk of stepping onto a square that's not in your favor. Even knights have to hop around obstacles. So is Hong Kong's real estate market. One of the major challenges in Hong Kong's real estate market is the high cost of land and property, which limits the affordability and accessibility for many buyers and tenants. Hong Kong has a limited land supply and a high population density, which drives up the demand and price of land and property. According to CBRE Global Living, Hong Kong had the highest average property price of around $1.25 million US dollars in 2020, The high cost of property also affects the financing and liquidity of investors who need to secure adequate capital and leverage to enter and exit the market. Another significant challenge in Hong Kong's real estate market is the stringent and changing government regulations, which affect the supply and demand of property. The government controls the land supply and implements various measures to regulate the property market, such as stamp duties, cooling measures, vacancy taxes, and subsidized housing schemes. These measures aim to curb speculation, stabilize prices, increase supply, and promote social housing. However, they also create complexity for investors who need to comply with the rules and anticipate their impact on the market sentiment and direction. To address these challenges and risks, successful investors adopt various strategies and tactics such as managing the risks by conducting due diligence, setting realistic expectations, hedging against currency fluctuations, securing adequate financing, partnering with reputable developers, and tapping into professional networks. Also embracing environmental, social, and governance, ESG issues, and building more sustainable communities. And Wealth Herald bridges the gap between you and financial mastery. Dive into the world of the rich, unlock the enigma of money, and start your journey to side income success. Together, we make wealth achievable. So, don't miss out on this opportunity. Give us a like if you are enjoying the video. Now, based on current trends, what are the potential opportunities for investors in the coming years? Let's find out. The future of Hong Kong's real estate market is uncertain, but promising depending on how the city adapts to the changing economic and social environment. What are the current trends in the market? Are there opportunities? One of the current trends in Hong Kong's real estate market is the surge in demand for new off-plan launches, which are projects that are not yet constructed. These projects offer attractive prices, flexible payment terms, and potential capital appreciation for buyers willing to take risks and wait for completion. According to Colliers, new residential supply in 2022 is expected to reach 21,000 units, the highest level since 2004. Another current trend in Hong Kong's real estate market is the increasing focus on environmental, social, and governance issues and sustainability. As consumers and investors become more aware and concerned about the impact of real estate on the environment and society, developers and landlords are adopting more green and socially responsible practices, such as reducing carbon emissions, enhancing energy efficiency, promoting wellness, and supporting community development. According to JLL, ESG factors are becoming more critical for real estate decision-making and valuation. Some examples of ESG initiatives in Hong Kong include Linkriot's Green Bond Issuance, Swire Properties' SD 2030 Vision, and Henderson Land's Urban Renewal Projects. Based on these trends, some of the potential opportunities for investors in the coming years are investing in new off-plan projects that offer attractive prices, flexible payment terms, and potential capital appreciation. Investing in green or ESG-friendly properties with lower operating costs, higher tenant retention, and higher valuation premiums, and investing in emerging or niche sectors with high growth potential, such as TMT, e-commerce, logistics, data centers, and self-storage. As John F. Kennedy, the 35th President of the United States, famously said when written in Chinese, the word crisis is composed of two characters. One represents danger, and the other represents opportunity. Let's embrace opportunities. We've learned that Hong Kong's real estate market is a lucrative but challenging arena for investors who must adopt various strategies and tactics to succeed. They also show that Hong Kong's real estate market is undergoing rapid and profound changes, creating opportunities and risks for investors. Potential investors should be well-informed, well-prepared, and well-adapted to the market dynamics and uncertainties. One area of the investment schemes which has seen tremendous growth is AI. Apple is doing well in AI too. Check out our video on Apple's secretive chatbot to learn more.